Welcome to Maximizing Shareholder Value through Strategic Financial Due Diligence. In this presentation, we'll explore how financial due diligence functions not just as a verification tool but as a strategic framework to protect capital, identify hidden risks, and enable value creation in M&A transactions. Presented by Hanel Accounting Firm, your trusted partner for cross-border due diligence and valuation advisory. One of the greatest risks in M&A is falling into a value trap when a business appears healthy on paper but conceals structural weaknesses beneath. Without thorough due diligence, investors face three main risks: distorted financial statements, hidden one-time losses, and weak operating cash flows that lead to post-deal insolvency. True financial due diligence uncovers these red flags before capital is committed, protecting investors from catastrophic loss. Management projections tell a story, but due diligence transforms that story into verified facts. We challenge management assumptions through independent market validation, customer contract review, and technology ownership verification. This process converts optimistic forecasts into data-backed investment theses, replacing narrative with evidence. Valuation without due diligence is speculation. Reliable valuation requires financial analysis grounded in verified data. Findings from due diligence feed directly into DCF and multiple-based models, adjusting EBITDA, normalizing earnings, and identifying sustainable margins. Informed valuation decisions are built on fact, not hope. Every finding in due diligence translates into negotiating power. Identified overstatements and hidden liabilities provide objective justification for purchase price adjustments and escrow protections. Whether under a closing accounts basis or a locked box structure, due diligence ensures the buyer pays the right price for the right value. Due diligence directly informs deal contracts. Each identified risk is converted into representation, warranty, or indemnity protection. In the Korean market, where related party transactions and complex tax structures are common, enhanced disclosure and extended indemnification are essential. Ultimately, due diligence reshapes deal terms to allocate risk, not absorb it. The end of a transaction is only the beginning of integration. Due diligence insights guide post-merger execution, defining organizational structures, identifying key talent, and planning system integration. When integration planning begins during due diligence, investors minimize disruption and accelerate value realization after closing. Sellers often promise aggressive synergy targets, cost savings, market expansion, and operational efficiencies. Due diligence teams must test each assumption. By verifying feasibility, timing, required investment, and execution risk, we separate achievable synergies from over-optimistic projections. The result: realistic value creation backed by evidence, not expectation. Quality of earnings, or QoE analysis, filters out accounting noise. It adjusts EBITDA for non-recurring items, one-off gains, and owner benefits to reveal sustainable profitability. This clean earnings base becomes the foundation for credible valuation and investment judgment. Quality of assets, or QoA analysis, examines whether recorded assets reflect true economic value. It tests collectibility of receivables, obsolescence of inventories, and recoverability of fixed and intangible assets. Together, QoE and QoA deliver a 360-degree view of business health, ensuring both profitability and capital preservation. Financial due diligence is not just an accounting exercise, it's total risk management. It identifies value traps, strengthens negotiation leverage, supports integration, and validates synergies. In a world where M&A failure rates exceed 50%, rigorous due diligence transforms uncertainty into measured risk and converts risk into value. Hanel Accounting Firm's team consists of trained professionals from PwC, KPMG, Deloitte, and EY. We combine Big Four quality with agile execution, offering deep experience in M&A, IPO, valuation, and audit. Our commitment: global standards, local insight, and client-centered solutions. In cross-border M&A and financial due diligence, communication defines success. At Hanel Accounting Firm, We eliminate language and cultural barriers through bilingual proficiency in Korean and English, ensuring clarity, accuracy, and trust across all stakeholders. Our reports and presentations are prepared directly in English for global investors and headquarters, enabling fast, transparent decision-making. We work seamlessly with private equity funds, strategic investors, and corporate HQs, supporting rapid execution and minimizing misunderstanding. With Hanel, global collaboration becomes effortless, turning cross-border complexity into confident communication. We deliver Big Four-level expertise with a lean, agile structure, enabling rapid execution without unnecessary cost. Our competitive fee model ensures maximum client value while maintaining global quality standards. We focus on delivering actionable insights, not just reports, helping investors strengthen decision-making and negotiation outcomes. Every project is designed to balance high value and cost efficiency, offering optimized service for mid-sized companies and private equity funds. As a proud member of Crow Global, one of the world's top 10 accounting networks, Hanel provides consistent quality and global reach. Through over 750 offices in 130 countries, we support both inbound and outbound M&A projects, combining local insight with international expertise. Financial due diligence is more than analysis. It's a risk control and trust-building process. At Hanel, we combine reliability, multilingual capability, and global collaboration. Your success is our mission. For more information, contact us by my email. Thank you for watching.